A lot of you watching out there, all the women out there, you may either be in a job, you may be unemployed, or you may be having your own business. Whichever way it is, all of you do need a certain amount of money put aside for a rainy day, a certain amount of money that you have to pump into your business, or a certain amount of money that you just need for emergency. Like I said, rainy day. All those people out there who are in a job and are bored of your 9-to-5 job, this show is all the more for you because it will give you some lessons on what you should ensure that you have set for yourself financially before taking the plunge into the relatively scarier world of business. And yes, I say that because unlike your job, unlike the predictability and the regularity and the steady inflow of cash, a business does not have that. And hence, it's all the more important to ensure that your finances are set and you do not have to worry about that. You can wholeheartedly concentrate only on your business. So that's what we want to discuss on Women Entrepreneurship Day. And we have with us Uday Doot, co-founder of When Wealth, joining in right now on the show. Uday, thank you so much for joining us on the Money Show. Now, usually most entrepreneurs start off in a job, in their regular 9-to-5s, or in many cases 9-to-9s. They have that steady salary flow coming in, and then they want to make a transition into having their own business so that it provides them more flexibility, provides them some more room to maneuver when it comes to money matters. So what is it then that all our viewers out there who may be in their jobs and want to make the transition to business, first, what should they keep in mind before they make the big jump?
I think this is very interesting, and we talk of business. I think the other big change that we are seeing is this whole prevalence of freelance or gig economy. So essentially, in a way, the person is becoming a businessman and basically wants to go away from the 9-to-5 thing. So now, what are things that you need to really think about once you make that move? I think the biggest thing that happens being in a salaried job is that we get used to that specific amount getting credited to our bank account every end of the month, and then we have all our EMIs kicking in, or maybe some savings kicking in, some regular expenses kicking in, and maybe credit card bills kicking in, and all these other expenses. So I think the biggest thing that one needs to think about is that how do you go around managing the cash flow, and how do you ensure that your regular expenses are taken care of? That's the first thing that I think is very, very critical and important. The second thing which I think is very important when you start thinking from a finance standpoint of view, and today we are not talking about the other things that an entrepreneur goes through, both from mindset, the various challenges that they face. We are talking more focus around what are things from a finance standpoint of view they need to take care of. So the second thing that they really need to think about is risk management. When I say risk management, there are two critical things that we need to protect against. One is the risk of bad health and expenses arising out of that, and the second is basically ensuring you have sufficient life cover. Now, when you're employed, most of us are unaware, but we do have these group health covers that ensure that we are covered, and maybe with many companies our parents are covered, and so on and so forth. Now, as soon as you make that shift from being employed to being on your own, you need to ensure that you are sufficiently covered. Ideally, ensure that you buy these insurance at least few months before you start starting up on your own. So health, I think, is very, very critical. Many of the youngsters would also maybe have their parents in their company policies right now. Now you would want to think about, can you shift your parents to your siblings if they are also working with companies, or how can you take maybe insurance for them, because that is something that can derail a lot of the planned things that we have. So ensure that you have sufficient health cover, not only for yourself but for the whole family that is dependent on you. Third is ensuring that you have sufficient life insurance. Now what would happen is that as soon as you start your business, your income will go through like a roller coaster. You will have some time before it sort of stabilizes, right? So while you are salaried, you have a very, very consistent income flow. So if you are thinking of buying insurance, if there are liabilities on your head, if there are dependents who are dependent on your income, it would be good to buy this insurance, the life insurance that you would require while you are at job. Because of that whole consistency of income, it would be easy to go through the whole underwriting process. So that's the risk management bit that you need to think about. The third thing that one needs to think about is what kind of business one is getting in, and then depending on that, what kind of money required And the requirement can be thought of in two ways, right? What is it that you need as an initial investment in the business? Sometimes it may not be required, sometimes it is required. And apart from that initial capital expenditure that you need to make, what are the regular cash flow, working capital requirements that you may have? So like we said, we set up something, the revenues will start kicking in over a period of time, but your expenses start kicking in from day one. So how do you ensure that you have sufficiently earmarked money for capital requirements, for working flow requirements, and put them separately in a business fund? Now, some people would have saved sufficient amount of money, would know that, hey, I have enough to take care of these things. Some people may not have saved sufficiently. It does not matter whether you have saved sufficiently or have maybe insufficient savings. What is important is that create some kind of a demarcation within these savings for money that is going for business and money that is for personal. I see many times with many business, there is just no demarcation of personal investments or personal assets from business assets, and it all gets mixed up, and sometimes you overextend yourself on the business side because business continues to consume money. So just maintain that healthy sort of balance and that demarcation of business money versus the company money. I think the fourth important thing that one needs to think about as one makes that shift from being salaried to being a businessman is that suddenly at a job you had zero compliance requirements. All the tax was deducted at source. At the end of the year you were handed over your form 16. If you didn't have any other income, you really need not worry about anything else. But as soon as you take up your business as such, you will need to think through, okay, what kind of compliance requirements are there, tax requirements are there, do I need to take a GST in my name, do I need to take any other sort of license, when do I need to pay for these specific things? So that becomes important. So having a good professional CA or a financial advisor to sort of back you up, to make sure that these things are taken care of so that you can concentrate completely on your startup, on your business. So these are, I would say, 4 or 5 important heads from a finance standpoint of view that one needs to really think about.